Well, going to move now to take a look at how the Kenyan markets have been performing. And joining us from our studios in Nairobi, we've got Kenneth Minjire. He's the fixed income analyst at Genghis Capital. Kenneth, thanks so much for your time. I'm not sure if you heard the interview with the CEO of Home Africa, saying that it's basically on accounting principles that were changed that we saw such a drop. Were the markets convinced? How did that stock perform on the back of these news?
Of course, apart even from the accounting, it's been quite a difficult environment for the property market, and of course the growth, the kind of growth we were seeing in real estate for the last, I'd say 5-6 years has slowed down quite a bit in the last 24 months. But yeah, the stock actually has, since it came on the board, it has performed quite well after a poor show. There wasn't much of a reaction from the market today, but going forward, we may see people start to exit the counter. But you also have to remember, it's the only counter with the direct real estate exposure in our market. I think the closest to it would probably be housing finance, which falls more under the financial and banking stocks. So either way, for any investor looking for direct real estate exposure, they don't have much of a choice apart from putting it in Home Africa. Of course, we do have rates coming on board, but this has still not yet materialized. Hoping before the end of the year, we'll have more options.
Kenneth, we're on the last trading day of the month for August. Perhaps you can run us through what were some of the themes that we saw, what was driving markets, and of course one of the things we will be talking about later before we move from that will be the shilling. But perhaps maybe let's just look at the equities just for now.
I think the market traded pretty flat this year. Of course, we saw some spikes, some good performances. We saw Equity Bank from 44 up to around levels where it's trading now of about 46.75, 46.50. Also, Safaricom traded quite well. I think today it was doing probably about 12.80, 12.85. So it was also a good month for that stock. Of course, there's the big one that outshone them all, BET, which touched 800 shillings. So there have been, the market generally across the board, it's been pretty flat if you look at the performance. But in between those weeks, there have been spikes and quite a number of opportunities to get in and get out of certain stocks. And of course, this is the market performance is in line with expectations, but also it's been quite a difficult month in terms of liquidity and in the money market. And also with interest, despite inflation rising in July, we saw interest rates held, were quite stable and were coming off. So we actually did see a bit of reallocation of assets from the equity market into the fixed income market.
Kenneth, perhaps let's just take a step back there. You mentioning liquidity, and of course that has a direct impact on the shilling. During the course of the week, we've seen the Kenyan shilling weaken, and then we saw it try and claw some gains. We saw the central bank intervention. Where are we in terms of how the shilling has reacted, and perhaps what are some of the things that we should be looking out for in the coming weeks that could have a fundamental impact on the unit?
Of course, yes, it has been, as you mentioned, a very tight, liquidity has been very tight this month, mostly driven by a delay in government spending due to some legislation that is still pending. So traditionally what would happen, and theoretically, is a tight market would mean a stronger shilling. But what we saw towards, as we approached the end of the month, was a lot of the traditional dollar demand from corporates, mostly driven by the energy sector. What happened this time around was the dollar inflows have been weaker than traditionally they usually are. And this had a direct impact on the shilling. Also, of course, some of our key foreign exchange earners, tourism, tea and coffee, all these sectors have been suffering. Of course, global commodity prices for tea and coffee have come off quite a bit. So all these have added up to reduce the amount of dollar inflows. And there has been demand for dollars, corporate demand, end of month corporate demand. But this was also coupled with a lot of institutions had actually gone quite short on the dollar from the beginning of the month in expectation that government spending would begin at some point in the month. But some of these positions had to be met as we approached the close of the month. So this also added up on the dollar demand that we saw and the pressure on the shilling. CBK came in, they funded the market through the reverse repos, and also there was some dollars they sold in the market. Going forward, we expect liquidity to ease in September. Of course, you know, the bill that we've all been waiting for is expected to be signed by the president some point next week. And immediately that is done, we will see the funds released. There's also a disbursement of about 29 billion from Treasury as a loan to the county governments. These are also funds that will hit the market. So we do expect liquidity to improve. This may put some pressure on the shilling, but of course, central bank, we do expect as we approach probably the level of 89 as they've shown, they may intervene in the market.
Kenneth, thank you so much for that insight. Now we know by September or in September, liquidity is most likely to improve. Thank you so much. That was Kenneth Minjire. Remember, he's a fixed income analyst at Genghis Capital.